What if you could earn the kind of returns the banks make on mortgages without being the bank? Most Canadians have no idea this investment vehicle even exists. But in the next few minutes, I'll answer the most popular questions about mortgage investment corporations, what kind of returns you can realistically expect, how your capital is protected, and how you can get started. If you don't know what a mortgage investment corporation is, I suggest you watch my video where I go in detail explaining about it. Please see the description below for the link. This video are just the answers to the questions most investors should be asking before they put a single dollar in anything like this. Hi, Kane again. I was a theater grad that started broke. 20 years later, I own properties throughout Ontario. Be sure to watch my biography video to see how I struggled. The information provided here are for educational purposes only. If you are making any investments, be sure to read the offering memorandum and speak to a professional. Without further ado, let's answer the first question. What is a mortgage investment corporation and how does it work? In the description below, there is a detailed video explaining about how this works. Essentially, to break it down really quickly for you, it is a bunch of people that pools their capital together and lends it out to people that want to purchase real estate. It's as simple as that. What is the minimum investment? That will depend on each mortgage investment corporation. Some minimum investments could be $50,000 and some could be $100,000. For our fund, we want to try to aim for $5,000, but obviously it's subject to lawyer approval as there are certain regulations that we have to meet. What are the returns that I can expect and how are dividends paid out? That is a very good question. The returns that you can expect are somewhere between 8 to 12%, again, depending on each mortgage investment corporation. For our fund, we are looking at 10% ROI return. How are dividends paid out? So dividends for us are paid out on a monthly basis. Some mortgage investment corporation, also known as MICs, are paid out quarterly, but for ours, it would be paid out monthly. So for example, if you had $100,000 invested into this particular investment corporation and it pays out monthly, you take $100,000 times 10%, let's say 10% is the return, you multiply, and that will give you $833 per month in income. Is my investment redeemable? And if so, what is the notice period? Most mortgage investment corporations have a minimum term of 12 months. Some might have 6 months, some might have 2 years. For our fund, the minimum investment term when you can redeem your initial investment will be 12 months. If you want to have the money earlier, let's say your plans change and you want to have your money back, some MICs may charge a penalty for it, or other operators that I've seen, they might have someone replace your position so that you can pull out your money afterwards. So you need to find someone that can replace your position. How is my investment protected if a borrower defaults? So loan to value is a term in which investors need to know. For mortgage investment corporations, we will never lend out more than what the value of the property is worth. We hire our own appraiser and go out there to appraise the property. Let's say it's worth $1 million. We will never lend more than $1 million. In fact, we will lend less than that. Normally, a safe investment for us will be less than 75%. So if anything happens to that particular borrower, let's say they default and the market also drops, the market have to drop more than 25% in order for us to lose our initial investment. So the probability of that on a 10-year history track record on real estate prices is relatively low, but it can happen. So these investments do have risks. And let's say the borrower defaults, so we will list the property on the market and sell it for X price and redeem our initial investment back and then pay whatever is left to the previous owner. So the loan to value is very important. The lower the loan to value, the safer the investment. The higher the loan to value, the more riskier the investment will be. Because if the market drops a particular amount, the probability of recovering the initial investment will be more difficult. What is the loan to value ratio on your mortgage portfolio? To be transparent, we are still in the process of going to launch. We are planning ahead and we have not launched our mortgage investment corporation yet. But upon launching, our loan to value will be somewhere between the 75 to 78% range. We are very conservative and we want to make sure that our investors are protected. What types of mortgages do you hold? First, second, or both? So yes, we would hold first mortgages and second mortgages. So for those who are unfamiliar with those terms, a first mortgage is a loan that is given to the borrower when they have no other mortgages underneath them. We are the first people that would be lending to these borrowers. A second mortgage is when we lend the money to the borrower, they will already have another existing mortgage on that particular property. So when we come into second position, it is more risky because if there is a default and they get paid out, the people in first position, normally in an institution, they will get paid first, and whatever is left, we will get paid second. We will get paid after if there is anything left. For example, there is a first mortgage of 60%. Okay, we come in and lend 15%, so that would make it 75%. We will never lend more than that, otherwise we would pass over the deal. If anything happens to the market, we will recoup our initial investment. Second mortgages are riskier, and that is why we charge a higher rate of 12%. And for a first mortgage, we can perhaps charge a rate of 8 to 10%. So second mortgages could have a rate of 12 to 14%. Depending on the deal, it also depends on the location, the borrower, and the property type. What is your historical default rate? So again, we have not launched yet, so we don't have that data. But for other mortgage investment corporations, I like to see something that is probably pretty high. So if they have the default rate of 2% range or higher, something is wrong. Maybe management is not looking at the types of borrowers in a way that they should be looking at. So that's something to look out for. The next question, okay, are you regulated and by whom? Yes, we will be regulated. Again, we have not launched yet, and we will be regulated by the Ontario Securities Commission. What types of properties secure the mortgages? Residential, commercial, or land? So we will be securing mortgages for residential and commercial properties. So there will be a mixed bag on that. What geographic areas will you lend in? For our particular MIC, Mortgage Investment Corporation, we will be focusing on secondary and tertiary markets. My region will be in Ontario. So we will be focusing on secondary markets like Hamilton, Kitchener, Waterloo, Sudbury, North Bay. Tertiary markets would be like Timmins, Temiskaming, Thunder Bay, like something along those lines. So those are the markets that we will be looking at. How many mortgages are in your portfolio and what is the average loan size? So again, we have not launched, so we don't have that data yet. But upon launching, we expect to raise about $5 million in initial capital raise. And within the 10 years, I want to get at least $500 million of assets under management. How do you assess and approve the borrower? So when we look at a borrower, it will be different from how an institutional underwriter would evaluate their borrower. For us, we mainly look at the deal primarily to see what type of deal this is, if it's a triplex, if it's a commercial building, an apartment building. We would also be looking at the borrower's credit score, and we would be looking at the location of the property as well. We won't be stressing a lot of information on the income that they would be getting, although that is important. We will be looking at an equity model when we lend to these borrowers. Also, the team that we'll be putting together, that we'll be assembling together, will be assisting me to evaluate these borrowers. How are dividends from the MIC taxed? So we will be issuing a T5, just how the Canadian government issues the T5s to you when you invest in GICs and bonds. So we'll be issuing a T5. And from there on, you need to speak to your accountant because each personal scenario is different. Can I hold this investment inside an RRSP, TFSA, or RRIF? Yes, these vehicles are eligible to be invested into the MIC, into the Mortgage Investment Corporation. Is there a prospectus or offering memorandum that I can review? Yes, we will have an offering memorandum prepared for you, also a subscription to review, so that when the time comes, you would have the opportunity to review all documents. Again, this document is normally 40 to about 100 pages, so you would take a look at everything. My team and I are here to answer any questions that you may have so that you feel comfortable about everything before you commit to it. I want to make sure that you are a right fit to the investment corporation when we launch, and that we are also a fit for you as well. How long has the MIC been operating? Again, we have not launched yet, so we have no years in operation. But I personally have over 20 years of real estate experience, as I discussed earlier, and the team that we'll be putting together will also have a lot of experience behind them. What are your management fees and how are they structured? At this moment in time, we do have an idea on the management fees. It would be most likely be around the 1% to 2% range for the management fee. Everything will be written in the offering memorandum when the time comes, so it is all transparent for you to read. Can I see an audited financial statement? We don't have any financial statements available yet because we have not launched. But when the time comes, when we produce that first audited financial statement, everyone participating in the MIC will have the opportunity to review that information. How much of the MIC's own capital is invested alongside of mine? Again, we cannot answer that question because we have not launched yet, but most likely our target is $5 million for the initial raise. So if you're putting in $50,000 or $100,000, which is the typical range that most people invest in, that would be kind of where your numbers are. And within 10 years, again, we would like to hit $500 million of assets under management. Can I transfer my shares to another person or a registered account? We have not looked into this particular question, but I will have the answer when the time comes when we launch. We would also be writing this out in the offering memorandum. So when the time comes, we would know the answer to this question. And there you have it. Hopefully I've answered all the popular questions about mortgage investment corporations that are out there. And if you enjoyed this content, be sure to watch my next video on how the rich protects their family from potential lawsuits and how you can do the same as well. Thanks for watching.